full faith and credit. Our government doesn't have it. And markets and investors in markets, they've known this for a long time. So this now has come about because 2023 will be a year when we have to address again our debt ceiling. It's coming due in the summer. The debt ceiling, if not expanded by legislation, ends up curtailing the borrowing that our government's allowed to do. This is a good thing. It has never been restricted, though. The legislators always come around to saying, sure, we'll borrow more, we'll tax people more, we'll pass bills that require spending that we haven't even read to make certain constituent groups happy. It is about time that that ended. And with it, people who want to have a more wholesome United States government, one that spends on the necessary and constitutional things that it's allowed to do, will have a little bit more say, maybe a lot more say. House Speaker Kevin McCarthy has a few holdouts that have, for now, gone along with him staying Speaker for the beginning of 2023. I hope that these holdouts continue to resist spending, and I hope that it grows. And now, if they will only be willing, I think some of them are, to let our country go into financial default, it will be a good thing. To have the possibility of better governance because a group of legislators don't have to keep saying yes. They will have the temerity to say, fine, we'll default in the name of getting better governance. Now, what's so bad about a default? A default means we do not have the ability to pay all that we owe to lenders. Now, in private practice, this happens routinely, okay? Every month, many corporations, some banks, plenty of private non-corporate groups, they go into default. And those who lent money have to take a portion, not 100%. Well, after all the suffering that so many people, investors and non-investors, have had over the last literally 20 years, the power of the dollar has gone so low, the takings from our bank accounts have been so high in the form of taxes and fees and now inflation, it might be just regular course of business to recognize that people who were promised a certain return if the institution holds up might not get 100% of their return because the institution that they put all their trust into wrongly, might actually be fallible after all. Putting 100% of your trust in any government is unwise. The United States government should be no exception, because when it is the exception, they end up preying with financial extractions on every American. It's time foreign lenders might have to take a haircut. And if they choose not to lend money in the future at as lower rate, fine. Market rates deserve to be at what real expectations of the return are. It might have to be higher. But guess what? In the process, better governance for this country might make us an even more attractive place to put money. Once again, lenders right now internationally, China knows that we are on the brink of default. They're still letting it ride. And so if it turns out that we actually do a default, it's not beyond expectations. Nobody's going to go to war over a 10 or even 15% haircut. Most of us experience 40% drops in our investments in 2008, close to that more recently. We've had highs and lows. It may be time for some bond investors, yes, that includes some Americans, who are always relying on the government to not be so secure in that in the name of making all of us more wealthy and more prosperous.